Alright, let's jump into this video where we're checking out a super slick trend following tool called the FRAMA channel by Big Beluga. It's built around a unique moving average that creates a dynamic channel around price action, making it easier to spot trends or even when the market is just hanging out in a range. We're gonna break down what this indicator does and pair it with another one for a solid trading strategy. If you find this video helpful, do me a solid and tap that like button. Let's dive in. To get this indicator on your screen, head over to TradingView. That's the platform I'm using here. If you don't have an account yet, no stress. There's a link in the description to sign up. Once you're on TradingView, pull up any chart you want, like Euro against USD on the 1 hour time frame. It's all good. Then click the indicators button at the top and search for FRAMA channel by, of course, Big Beluga. Big shout out to them. Hit that and boom, it'll show up on your chart. Check out this FRAMA channel by Big Beluga. It's pretty smart. It uses a fractal adaptive moving average to draw a channel that shifts based on how wild or calm the market's acting, giving you a clear view of trends and consolidation zones. So what's the deal here? You've got a channel with an upper band, a lower band, and kind of a middle line implied. You're mostly focused on those bands though. The cool thing? The channel and candles change color to clue you in. When price pops above the upper band, it goes green, hinting at an uptrend. If it dips below the lower band, it turns blue, signaling a possible downtrend. And when price is just vibing inside the channel, maybe nudging the bands but not breaking out, it turns gray. That's your heads up for a low momentum or ranging market. You'll also see little arrows appear when a trend shift might be kicking off, marking where the price crossed the band. Let's peek at the settings real quick. Double-click the indicator and you'll see some options. You can adjust the legs to make the channel react faster or smoother. Shorter for quick moves, longer for a steadier view. There is a band distance setting to control how wide or narrow the channel is. A neat feature under signals data lets you pick whether the arrows show the breakout price level or the average volume at that moment, which can hint at how strong the move is. You can also tweak the colors for up, down, and neutral modes if you're feeling fancy. Oh, and if the candles aren't showing colors, click the indicator on the chart panel to sync them up. For this strategy, the default settings work great. So let's hit OK. Now, how do we trade this FRAMA channel? The green and blue signals are looking tempting, but sometimes they fire off in choppy markets, leading to fake outs. That gray channel warns you of ranges, but we can level up by adding a filter. Go to indicators and search for the Indian oscillator by Alex Groover. Big shout out to him, by the way. Add it to your chart. This oscillator is awesome for confirming trends. It's got 3 lines: green, red, and orange. Green above orange screams uptrend. Red above orange says downtrend. Orange on top means the market's flat, and we skip those FRAMA signals. Here's the strategy. For a buy, we need the FRAMA channel to flash green candles, showing a break above the upper band, and the Indian oscillator's green line above the orange line to confirm bullish momentum. Enter long on the next candles open. For example, say the candles are gray, showing a range. Then price breaks above the upper band, turning green. That's the FRAMA signal. Check the oscillator. Green lines above orange. Sweet. Go long at the next candles open. Set your stop loss below the recent swing low and aim for a take profit of 1.5 times that distance. That trade worked out nicely, but if you want to know how to make more than 1.5 to 1 risk to reward ratio, make sure to watch the entire tutorial until the end because I've got a surprise for you up my sleeve. For a sell, it's the opposite. You need blue candles from a break below the lower band and the oscillator's red line above orange, confirming bearish vibes. Example, markets ranging with gray candles, the price breaks below, turning blue. Oscillator shows red above orange. Go short at the next candle's open. Stop loss above the recent high. Take profit at 1.5 times your risk. If the FRMA signals but the oscillator's orange line is on top, skip it and wait for alignment. To sum it up, the FRMA channel by Big Beluga is a slick tool for spotting trends and ranges with its adaptive channel and color-coded candles. Pairing it with the Indian oscillator filters out choppy market noise, letting you focus on trades with solid momentum. This isn't financial advice, just an educational look at combining these indicators. Do your own research, layer in price action or fundamentals, and manage risk before trading real cash. And as I promised before, if you want to know how to make way more than 1.5 to 1 risk-reward ratio or any other corny kind of risk-reward ratios, make sure to check out the Fibonacci retracement levels with my own customizations combined with price action video, which you can see on the screen. And also, if you want to know how to turn any trading strategy, including this one, into a bot with alerts, all for free, so it does job for you while you're not around, make sure to check the other recommended playlists. Believe me, you will thank me later. If you learned something, smash that like button. It helps a ton. Consider subscribing for more though. Thanks for watching and I'll see you next time.